today on the Tearsheet podcast.
And so we're excited about the fifth year. I think it's our best year ever, best cohort. And we're very excited about how we continue to mature this. But the Accelerator is focused. It's about us bringing solution sets to our clients that we may not have at the moment, we may not be investing or may not invest to build on our own. And we recognize that these accelerators are solving white space solutions for our clients. And so we choose to work with early stage companies to try to help them mature their companies and also expose them to our client set to get real-time feedback, go to market, problem solving, pricing, those types of things to help them be better companies and also help our clients at the same time.
Welcome to the Tearsheet podcast. I'm Tearsheet editor, Zack Miller. We've spoken to a lot of innovation program execs on this podcast. From corporate venture investing to accelerator programs, traditional FIs in various ways are trying to leverage the innovation that's happening in Fintech. This hasn't been lost on the providers either. FIS runs its own accelerator that gets early-stage Fintech firms in front of its clients to help solve their problems. FIS Banking Product Officer Spencer Jones joins me on the podcast, along with Laura Kornhauser, CEO and founder of Stratyfy, a Fintech company in the current cohort at the Accelerator that develops AI-driven predictive modeling software for FIs. Here's our conversation. What could you do with better real-time consumer data? All data aggregation from Fiserv enables access to consumer permission data from over 18,000 sources. Lenders, advisors, fintech firms, and financial institutions can turn this data into actionable insight for their customers. Go to fiserv.com/alldata to learn more. Before we hop into our show, I wanted to tell you about Tearsheet's upcoming Challengers Conference, a first-of-its-kind event. This 2-day online conference is everything about digital banking. We'll have senior executives from top challenger banks like N26, Revolut, Oak North, and Betterment, as well as new entrants to the digital banking market like Intuit and Credit Sesame. It's all happening September 22nd and 24th. Go to tearsheet.co and click on conferences at the top to learn more and register.
Hi, I'm Spencer Jones. At FIS, I lead our banking product organization. FIS is 3 different divisions. We have a merchant organization, a product set focused on merchants. We have a capital market set product focused on capital markets. And then we have a banking product set that I lead. And so I also lead our accelerator. And so that's part of our conversation today. And so the banking side of things, which would involve our banks, the payment products we offer to the banks, and the accelerator associated with what we're going to discuss today. And I've been with FIS for about 2 years. Most of my time has been with banks like TD, Bank of America, that sort of thing. So great to be here. Excited to talk.
Thanks for joining us, Spencer. And Laura, can you identify yourself?
Absolutely. Hi, I'm Laura Kornhauser. I'm the co-founder and CEO of Stratyfy. Stratyfy's platform helps financial institutions improve risk-based decision-making across their organization, while also helping you do important things like mitigate unconscious bias and ensure regulatory compliance. We're talking about decisions like which loans to approve or what to investigate for potential fraud. And really core to our differentiator is what we call true transparency that allows us to bridge the gap between business users and data scientists, really marrying subject matter expertise of the business user with the data modeling abilities of data scientists. And my background is in financial services. I spent over a decade at JP Morgan, and I'm very proud to be part of the current cohort in the FIS Accelerator.
Great. So thank you both for joining us today. We'll start with Spencer. So can you give us a little background information on the FIS Accelerator?
Sure. So it's our 5th year, and I would say we've learned each year a little bit more on how to be more effective and more focused. And so we're excited about the 5th year. I think it's our best year ever, best cohort, and we're very excited about how we continue to mature this. But 2 things I would point out is, one, the accelerator is focused. It's about us bringing solution sets to our clients that we may not have at the moment, we may not be investing or may not invest to build on our own. And we recognize that these accelerators are solving white space solutions for our clients. And so we choose to work with early stage companies to try to help them mature their companies and also expose them to our client set to get real-time feedback, go to market, problem solving, pricing, those types of things to help them be better companies and also help our clients at the same time. The other thing about the accelerators is this first year we've done it virtually, and we're not the only one in the world right now doing things virtually. And so couldn't be more pleased and proud of the team to be able to pivot what is typically considered face-to-face and late nights and working together and sitting around scrum tables to try to redo all that virtually, I think was pretty impressive. And at the end of the day, innovation is a combat sport, and bumping up against others, bumping up against great ideas, figuring out how does that fit a need and not fit a need is the purpose and point of the accelerator. And so we're thrilled to continue to do this and work with great companies.
I love that quote, that innovation is a combat sport. But before we go to Laura, Spencer, can you give us a little, I guess, drill a little bit deeper in terms of what the cohort gets from FIS as part of the accelerator experience?
Yeah, so the reason I like innovation as a combat sport is you have to bump into ideas, you have to interact with folks. And so when you think about all the different offerings that FIS has, there are places where we'll choose to invest like a shareholder, and we'll put dollars in play, and we'll take capital positions in companies, and we'll act like an investor. There's other places where we'll invest our own capital to build solutions. There's other places where we'll white label partnerships, and we'll sell those solutions to our clients and to meet needs. And then there's other places like the accelerator where we're taking young ideas, young problems, ideas that haven't even completely matured yet, but we know there's something there. We know there's a problem to be solved. In this case, an example of unconscious bias. These are areas that need focus, and then you start combining those with AI and some other components, and you want to accelerate those ideas. So we'll take young companies and we'll say, we want to learn too. We'll expose those clients and those young companies to our clients, to our business partners, to our product partners, to our technology partners. And we'll start bumping those ideas back and forth. Well, why did you think about it that way? Why do you think there's a problem that way? If you went to market, how would you go to market? Which one of our clients see this pain the most? When our clients spend time with the customers, do they see the problems the same way as some of the young companies see the problem? And usually it's a back and forth. Some of the young companies realize how to position their solution differently to fit a real world need by our clients. And sometimes our clients realize, hey, this is a problem I didn't realize I had. And I'm glad that you're bringing these early ideas to me. And so it really is, it feeds needs to our clients, but also to the accelerators. And we're excited to be part of it.
Got it. And Laura, I want to, throw the ball to you. When you were looking about, I guess in the formative stage of Stratyfy, and I understand it's still a young company, what were you looking for in terms of an accelerator partner?
Yeah, it's a great question. And we've been part of other accelerator programs as well, and really find what FIS is offering to be so unique. And I think a lot of that is what Spencer was talking about, the almost multidisciplinary approach that FIS is taking to not just innovation, but to this accelerator. What we find is really powerful being one of the companies is that we are getting an opportunity, not only to explore partnerships within FIS. We're already having discussions around POC opportunities and have multiple discussions in progress with multiple lines of businesses. We're also getting in front of FIS customers. We've already met to date in the program, already met with 12 banks. Wow. And by the end of the program, we will meet with, at least that more and maybe another 20. So that's a really unbelievable opportunity. And then we also get exposure to VCs, we get exposure to subject matter experts, and it's all around that goal of really accelerating go-to-market and accelerating your sales. And I think that is such a unique angle that the FIS Accelerator takes in this program versus many other accelerators where, it can be a little one size fits no one. This one is extraordinarily customized. We have a champion within FIS, Nicole. She's absolutely fantastic. She's, helping us, bang down doors, bang down walls and make things happen. We have the venture center who helps run the program, who kind of serves as the glue between all of these folks that we're meeting, both internally at FIS and externally with their banking partners. So I think it's really they take a very hands-on approach, a very active approach, and it's very custom and tailored to each individual cohort company, as opposed to trying to be kind of a one size fits no one very well type program. So I think that's really unique and special.
And now, a word from our sponsor. At Tearsheet's Day-to-Day Conference, Fiserv's Paul Diegelman drilled down into the future of personal financial management. Paul, you're talking about PFM 2.0.
It's actually two separate and distinct applications. Liquidity is a huge problem right now. People just don't have time to do things twice. Basically, most parts of the country shut down for COVID. Our PFM user growth was over 20% in the first 2 weeks alone. Underrated, 100%. How could we use AI to impact PFM? I'm up for anything that helps people. And to help people, you need an economic model.
To access the full video from Paul's talk, go to tearsheet.co/speedoflife. That makes a lot of sense. Is your mentor Nicole Jass?
No, Nicole Brock.
Different
Yeah.
Nicole. Okay,
Yeah,
we had
different
Nicole.
Nicole.
We had Nicole on the podcast recently. So I want to stick with you, Laura. Like, what has your experience been? I know Spencer said this the first time. Obviously, the world changed. You did this in an all virtual sort of setting. Like, what was your experience participating in an all virtual setting?
Yeah, again, I think it's extraordinarily impressive how FIS adapted the program for that virtual environment. So instead of saying, "Hey, we're going to take the same program and just make it be over Zoom as opposed to in person," right? They flipped the script a little bit. So we had a pre-Accelerate program. So that was almost 2 months where we were focused on really developing relationships with our FIS champion and internally within the FIS organization. And really that pre-Accelerate program was meant, one, not to jumpstart those conversations internally at FIS, which is so valuable because FIS is obviously a fantastic and large organization, which means things can take time. So it's so beneficial to have that jumpstart. But also to really prepare us to be in the best position possible on day one once we start having those meetings with banks. So we're not walking in without having that guidance and that tutelage from both our FIS champion and folks we've met within FIS, but also from folks within the venture center that helped us really hone our pitch for those banks and really go in kind of day one of the 12-week program, not starting kind of at home plate, taking swings, right? Ready to really get out there and really succeed. So I think the way that they adjusted the program because it was virtual, as opposed to just saying, "Hey, now we're doing everything on Zoom," was really impressive and really a sign of how this program is really meant to help accelerate those sales discussions and put cohort companies like Stratyfy in the best position possible to succeed.
Yeah, it's also pretty amazing how much FaceTime you got with FIS customers. That's very impressive. Spencer, you mentioned this is the fifth year that you've been at this. So how has the program evolved? What are some of the learnings that you guys have taken, I guess, that maybe filtered back into the program to change or tweak, or like, what have your takeaways been?
Yeah, I would say for us, and Wayne's been on this journey. Wayne at the Venture Center has been on this journey with us, that clarity of purpose is important. The reason the Accelerator has the name Accelerator is because we want to take young ideas and accelerate them into exposure to our clients so that they can meet real-time needs that they have at the moment. It's not intended to be an investment vehicle. It's not intended to be an investment fund like a venture capital. That's an entirely different model and different approach. And so as we've evolved, that purpose and clarity has helped. And so as we meet cohorts, we're trying to say to them, we have a large distribution of clients. And as we have this large distribution of clients, they have varying needs. So as we pick cohorts, we're trying to meet needs that we know and needs that we don't. So clients are able to say, yeah, that's been on my mind, but I've never really said it before. That's been on my mind, but I haven't really figured out how to solve it before. And they learn as much from our cohorts as the cohorts learn from the clients. The other is to take a global view on things. And so you think about things like open banking, it's accelerating in other parts of the world differently than it's accelerating, say, in the US. And so you want the cohorts to be able to be international and global in scope so they learn from each other. And so whether it's San Francisco or New York, or whether it's Singapore and Turkey, we want to make sure we're bringing that diverse points of view to a global mindset to solve global problems for our clients. And so that's probably the biggest change for the Accelerator, is one, global in nature, And the other is specifically and deliberately trying to accelerate solutions into our client base so clients can meet problems they know and don't know they have.
That makes a lot of sense. And I guess I want to come back to that from a different perspective. So there are trends, there's different, clients need different things in different environments. How has the composition of these cohorts changed over the 5 years that you've been at this? And maybe if you can tease out what that might say about, where fintech is headed, I think that would be interesting.
Yeah, I would say, historically in the past, it was a little bit more associated to, we have a business line called X, and we're looking for solutions that fit that business line. What it's turned more into is we have market problems, Y, and that could apply to 5 or 6 different businesses in 5 or 6 different markets around the world. So an example of it would be, we're not trying to solve fraud, we're trying to solve artificial intelligence that drives better decision making. That could be applied to fraud, that could be applied to other things. And as you think through some of these, you find yourself solving multiple problems. So we're not trying to build, let's say, a digital solution. We're trying to think through low-code development, which would allow digital capabilities for an assisted or an unassisted channel. And so you find yourself thinking about the problems that need to be solved in the market as opposed to here's the products that could be bought.
Great. I want to go back to Laura and hear more about the problems that you're solving within financial institutions and sort of hear the voice of the client. Like, what are their challenges and how are you helping them?
Yeah. So, in our space, there's a lot of talk around, as Spencer very aptly put it, how can you use AI? How can you use machine learning to enable better decision making? There's a lot of interest in that from customers, and folks are very focused on, how can I leverage this technology to really enhance my operations and improve my operations? And what we really find is that a lot of tech companies out there kind of say that they offer transparency, but when they say that, the type of transparency they're really talking about might, not really resonate with folks across that organization. May only be transparency for, let's say, the data scientists within the organization. And many organizations are really looking for something that not just, if you will, translates for those data scientists, but also can make the way to the folks that are typically the ones actually making the decisions, which are the folks frontline at the business, on the business side. And really looking for technology that is not just offering, transparency for transparency's sake, but actually transparency that helps them drive, better business outcomes, helps them, increase the inclusivity of their product suite, something that we're very focused on, helps them say yes to more customers without increasing risk, really helps enable the humans within the organization with the technology, as opposed to saying, hey, this technology is here necessarily to replace humans. And that's really what we're very focused on at Stratyfy. We're focused on, when we talk about transparency, really offering a real human level of transparency and understanding that goes into how decisions are making, what goes into them, what comes out, so that the people that are often on the front lines of making these decisions, whether they're kind of managing folks, they're at, chief risk officer, head of compliance, a CFO, or they're actually on the ground talking to end consumers, they can really use that technology to gain better visibility and make better decisions. We're seeing just an unbelievable need for that, as Spencer mentions, kind of across different use cases by folks out there. And that's very much what we're focused on helping solve.
That makes sense. And I'm curious to know also how your background at JP Morgan impacts, I guess, your ability to, converse with a potential prospect within a financial institution. Does it impact it? How does it impact it?
Well, perhaps this is self-serving, but I like to think that it's helpful.
Okay. How so?
I find that a lot of folks can kind of come into financial institutions. They're extraordinarily intelligent. They have a really powerful technology, but they don't really understand the business problems that the folks on the other table or side of the table are really trying to solve. So I think my background and other backgrounds of those on our team, and it's not just me, but the backgrounds that we have experiencing those types of problems firsthand really helps us be able to make our technology, which it's very powerful, it's very cutting edge, but make it accessible, make it relatable, make it, for lack of a better term, not scary. Zack, which I think is so important and so valuable. I very much was experiencing these types of problems in my role at JP Morgan when we were, these problems, when I say that, of trying to conduct business effectively amidst a changing regulatory environment and not having the technology I needed to comply with changing regulations. At that time, it was Dodd-Frank that we were really dealing with most, but comply with changing regulations, having the visibility to do that behind the technology that we were using to really continue to conduct business effectively. And that very much was, I'll say, my aha I had in that seat that set me on a path to find my co-founders and start Stratyfy. So I think that knowing that and having experienced that firsthand, even at such a wonderful, organization like the one I was part of, helps me hopefully be able to communicate with folks and really try to make it not be a technology I'm coming in to try to sell to them that replaces them or doesn't value them, but really something that's there to enhance their experience, enhance their knowledge, remove the more mundane and painful things from what they do every day, as opposed to something that can be more alienating or more foreign.
Yeah, I can definitely see that interplay at work in your current role. Spencer, you mentioned, I want to go back to that analogy about innovation being a combat sport. You mentioned the Accelerator, sits alongside this new corporate venture arm that FIS I know created earlier this year. Can you talk about the Ventures initiative and I guess how that plays into your overall innovation strategy?
Sure, happy to. So when we think through innovation, a lot of times we do believe it's a contact sport, but it also takes contextual understanding. So your product manager might be thinking about a problem that needs to be solved, and they understand the context of the problem, working with the clients. But we may take an investment in something that accelerates a new capability, and that's got a financial return that might meet a need in the out years. But it's a financial return in the fintech space that may cause disruption. The Accelerator and our product investment roadmaps are designed for our clients here and now, for the solutions they have here and now. And so there's an interplay between the two, and I would kind of call it Horizon 1, Horizon 2, and Horizon 3, meaning the near-term horizon is the product sets that we have. The medium-term horizon would be things we're doing with partners, things we're doing with the accelerators, and the longer-term horizon might be areas we're investing in. And the reason I believe it's a contact sport is you can't be all things to everybody. And the marketplace demonstrates if you try to be all things to all people, you probably are nothing to nobody. Mm-hmm. And so open is important. Being able to partner is important. And so for us, being able to understand Horizon 1, Horizon 2, and Horizon 3 and where we play in each area is important. But it's also important for our clients to understand that there's a near-term, medium-term, and longer-term view of where we invest and how we invest to meet their needs.
Great. So I'm not sure which horizon this would fall under, but given where you sit and given the craziness that 2020 was, what's your outlook on fintech for the rest of the year and I guess into 2021?
Yeah, I would say probably, some of the areas around open banking would be the most impactful. I don't believe in an industry, if you step back, whether partner, whether supplier, whether customer, whether client, whether competitor, I think the days of closed environments are gone. I think the days of having 12, 18, 24-month investment horizons are gone. I think you could be competing with somebody tomorrow and cooperating with them today, and trying to figure through how to compete and cooperate at the same time in an open environment. And I would argue that fintechs today are solving problems that nobody contemplated 5 years ago. And they'll be solving problems 5 years from now that nobody will contemplate as well. And clients are more and more dependent on these fintechs as opposed to competing with them. And you see that across the industry. There's a lot more cooperation across the fintechs, the banks, and the suppliers. And I don't see that slowing down. And I think that's all a byproduct of opening up an environment that's 50 plus years old and it's historically been closed.
Yeah, I totally agree on the competition. Laura, what are your big audacious goals for Stratyfy over the next 12 months?
Great question. We are, and we chatted a little bit about this, but we're extraordinarily focused on bias mitigation, and have been focused on it for a while, really since the founding of our company. It's one of the biggest, I'll say, so what's we believe of the level of transparency that our solutions provide. And that is something that is, a big goal of ours in the short term to really help address that problem meaningfully. There's been a ton of course, talk and focus and chatter around this, and we believe we actually have the technology and the product built that can help, begin to solve this, unbelievably large and challenging problem. So we are extraordinarily focused on how that can be used to both uncover unconscious bias, unknown bias in data, of which it's kind of everywhere. I always say that it's not a question of if your data is biased, it's a question of how. And we are extraordinarily focused on uncovering that, but not just uncovering it. I think a lot of folks have always used or historically used that data a bit as a crutch to continue to continue BAU or continue business as usual, and we have a real opportunity right now to break that down, turn that crutch, if you will, call it, into a ladder to get to a better place. And we can help folks not just uncover those biases in their decision making, but also importantly mitigate them. So importantly, do something about it. So that is a real focus of ours, especially right now, because we believe that hey, the market has cared about it for a while, and now people are actually moving towards, and corporations are moving towards a place of action. And we want to be the enabler or the technology that helps that happen, at scale.
Amazing. Spencer, Laura, thanks for joining us on the Tearsheet podcast today.
Thanks so much. Thanks for having us.
Thank you so much.